Investors and traders, welcome to the channel. Today is 20th of January 2024 and I hope everyone is having a great weekend. In this video we are going to take a look at the key markets that we follow, and today is going to be the weekly review and we'll be taking a look at how these markets performed throughout the week. This video is for educational purposes only and is not a financial advice. Okay, so what we're going to do is we'll just quickly start by taking a look at a review of how the different markets performed at a very high level. So we'll start with the bond market. So we are taking a look at the 10-year treasury note, which was actually also down 1.3%. To the downside, which means that the yields were a little bit higher, and the long bond futures, which is the US 30-year treasury bond futures, that was actually down more than the 10-year note. It was down 2 points and 28 seconds, so that is minus 2.34 percentage points, and it's kind of expected because long bond futures is a 30-year duration, so the investors will want to have there's more risk involved because of the duration. Dollar was firm. It gained 0.9%. Euro USD, of course, is the inverse. As the dollar is stronger, the dollar is going to be weaker. So it was down about half a percentage point. The really interesting one is actually the Japanese yen. So the Japanese yen throughout the week weakened against the US dollar, and it closed the week 2.27 percentage points down. British pound kind of mixed, slightly down by minus 0.38 percentage points. Gold actually lost $22 over the course of the week, and it did reach down to an interesting level which we had actually reviewed in our video last Friday. We'll take a brief look at the gold's chart as well, and silver has been actually weaker than the gold. Crude oil managed to actually carve out a positive week. It's been up 0.78 percentage points. And look at natural gas, it has been down nearly 24% in a week. Talk about some volatility. If you look at the natural gas chart, we'll have a look at the weekly chart. You'll see what kind of price action took place this past week. Amazing volatility in this market. And moving on to the cash indices and the futures markets for the US stock indices. Here another record week for the equity markets in the United States. S&P 500 made a new all-time high, and percentage wise it was up 1.17%, or a gain of 55.98 points, and a lot of these points actually coming in the last two trading days of the week. And here we look at the NASDAQ has been the best performer for the past week. It's been up 2.77%, or 469.25 points past week. And Dow Jones has been actually positive for the week, but it's not been as strong as some of the other indices, and we also have a key pattern formation, so maybe it's because of that as well. And then finally, last but not the least, is Russell 2000. This one actually lost on the week and was down about half a percentage point. Now I'll have a quick look at this chart as well. So this is our weekly levels for the standard deviations, and what it is actually showing is the amount of points in this column we were expecting for the market to move either up or down from these levels, which are the closing of the prior week, so the prior Friday close for levels, and this is the kind of movement in terms of points we were expecting for the week, and the +1 standard deviation levels and +2 standard deviation on the downside, the -1 and -2 standard deviation levels that we were expecting the kind of these ranges for these markets to move in. So we'll just have a quick review how actually these markets did. So taking a look at the ES, which is the S&P 500 E-mini futures, this was the low came in about 14 points higher than the -1 standard deviation. So the low was 47.46 and a quarter. So again, within our levels, NQ, NASDAQ 100 futures. These came about 20 within the range of about 20 points to the -1 standard deviation. So again, pretty good results there. And the Dow Jones didn't even come down to the -1 standard deviation. So perhaps if some of the stocks such as Apple, which begin to move, because Dow Jones is actually a price weighted index, not cap weighted index, that could have an impact, and maybe it might begin to play some sort of a catch up. And Russell 2000, because this one has been the weakest link in the key indices that we follow for the US market. Its low came in at 1904, which was between the -1 and -2 standard deviation. So the markets actually, although a pretty volatile week last week, but they actually traded within the expected ranges, which we had put forward a week in advance. And if you stick around this video till the end, then I will also be publishing the standard deviation levels for the next week to be expected, and also the ranges to be expected for next Monday for the daily ranges. So with that, we'll begin to take a deeper look at our charts now. Okay, so what I'm going to do is I'm going to start with this chart of cash Dow Jones Industrial, where we have been doing a cycle analysis. And what we found was that per our analysis, we were looking for around 17th of January ±2 trading days, an important low to come in. And based on our analysis, what did we see? In fact, on 17th of January, the markets did put in a important low, and from there onwards, the markets have been on a tear to the upside. So for the new subscribers, welcome to the channel. So I just wanted to run you guys through this chart again, what we are looking at, and what that 54 trading day cycle is, and how we were looking at to project it into the future to come up with the date for the 17th of January 2024. So what I tried to do was I tried to take a look at different number of trading bars that have taken place between high to low, low to low, low to high, and with that I was trying to understand if there is some sort of a rhythm which is repeating again and again to uncover some sort of a cycle. And with this kind of work, I was not able to establish a lot of kind of symphony from, let's say, for example, high to low or high to high. But what I did find was that when we count from low to low, we were getting a rhythm in the market, and I will just explain what that is. So for example, if we take this low, where we are, where my cursor is, so this is on the time axis, not on the price axis, and we take this low to this important low around here, what we get is about 53 bars, and each bar is a trading day, so we get 53 trading bars, trading days. And then if we take this low and this low, we get about 23. We take this one and this one, we get about 22 bars. And then if we take this low to this low, we get 56 bars. Now expanding this, because these two lows in between, they are kind of internal lows, and this one was a key low to a key low, 56 bars. And if I take we take this low to this low, we get 79 bars, which is about 1.5 times roughly 54 bars. And then if we take this low, it's not very clear here, this low to this one, we get about 81 bars, quite similar to the 79 bars. And then if we take this low to this low around here, get roughly 49 bars. This low to this low, 55 bars. This low to this low, we get 54 bars. This low to this low, we get 59 bars. This low to this low, we get 45 bars. Right, and then what I did was I took a harmonic mean for all of these. So I actually put them together, the number of trading days that we see, and I took a mean, and it happens to be a harmonic mean, and the harmonic mean came around roughly 53, 54. So going with the 54 number as the kind of the harmonic mean for these low to low cycles. And then what I did is, in fact, this is a key low, and if we project 54 trading days forward from 26th of October 2023. So what we get is a date which is 17th of January 2024. So 54 days from this low of 27th of October 2023, we come to a date 17th of January 2024. So this is why we were expecting a low to come in the marketplace, plus minus 2 trading days here and there on the either side. And what we have seen is, in fact, a pretty good low come in the market, and you'll see that these last 2 trading days, Friday 12th and then Tuesday 16th, because Monday was a holiday, were pretty negative days. And then Wednesday the market began to kind of get a bounce towards the end of the day. Then last Thursday, 18th of January, the market retraced all the way down to the last Wednesday's low, but rejected lower prices, closed higher, and Friday we have a fantastic rally. So this is something which is working and operating in the Dow Jones index, and this is the index which has the most amount of data available, and that's why I used it. Other markets such as the S&P 500, the cycles might be slightly different, but with the Dow Jones is the kind of the key index that I'm working with. And so what does it mean now? We have another important date to look at as well. So this is looking at from a low to low perspective and trying to find the number of trading days and try to project them into the future to come up with a cycle which happens to be working in this market. The other thing that I've done is basically, as you know, that in subscribers who've been following our channel for a while, we make a lot of use of Fibonacci extensions and expansions and retracements. So we normally do that on the price axis to come up with key levels to watch for, and then we look at the price action. And what I've done is I've actually applied it on the time axis as well. Now, one thing about time is elusive. So with that, there is going to be a degree of error in this, and we are going to watch this, how this is going to actually perform in the future. But based on that analysis, if we just project kind of the ABCD projection, which we do one-to-one price projection on the price axis, similar exercise on the time axis, we get an internal low which came around the 31st of October, and that's pretty close to the actual low which happened to take place on the 27th of October. So 30th of October, which is a Tuesday, actual low came in 27th of October, which also happens to be a 0.618 internal retracement. Now another key date which came up for this analysis is 28th of December 2023, and which happened to be a high, and that high remained a high for quite a while till it was taken out last Friday convincingly, and that is actually the one-to-one on the time axis. Now we have another date now coming up which we need to keep in mind, and that is 27th of February 2024. We'll have to wait and see how the price action is going to unfold between now and then, but a key date to keep in mind, which is 27th of February 2024. Now, one of the things is that when we are working with this Fibonacci extension on the price axis, we have this 0.618, which is a retracement, so it's like an internal retracement, and then anything after 1, that's going to be one-to-one projection. After that, those are more like extensions or expansions. So slightly different concept to this one in my opinion, and the key date to watch again, 27th of February 2024. Let's see how that will pan out. Okay, so with that, I hope I'm able to explain what I have been referencing in terms of the 54-day cycle over the course of past few videos. So now we'll just move on to the S&P 500 cash chart. And what we're going to do is quickly show you this fantastic ABCD price pattern which exists in here. We're on a daily chart with a target of about 49.10, and then moving on to the weekly chart. So we are going to take a look at the longer term charts because this is the weekly segment, so we should be analyzing longer term charts, and this is exactly what we are doing. So here, look at this trend line in blue. What a fantastic trend line is. So we go back to the March of 2020, right to the COVID lows, and you begin to actually align all these key lows that had come in, and we have a fantastic trend line running, and it's still intact. So this is what I've got here in the notes. SPX weekly long-term trend line support intact. It did come here. It was quite a lot of retracement that took place in 2023, and in October, towards the end of October, it touched this trend line, and look at what happened end of October. A very nice rally off that. Now on the weekly chart, we are looking at this one-to-one price projection ABCD, and we get a weekly level of 49.18, so roughly speaking 49.20, 49.10 on the daily chart, 49.18 weekly. So we are right around that kind of ballpark figure. So 4900 is the psychological level, and 4910, 4920, that's the kind of range we are looking at in shorter term. There might be higher targets as well, but just focusing 1 week to another week, this is the kind of levels that we are watching for in this market. Now let's take a look at the NASDAQ 100. Just going back to the SPX chart, actually, here just also want to point out, however, if we begin to close below the low of this candle's bearish candle, which is around 46.85, then that does change a few things, because one of the things that we also have to think about, take into consideration, is that although the market cleared this top here and formed all-time new highs, it is very close to the old highs from 2022, and if there is going to be some sort of profit taking, I don't know, whatever that could come into the market, then closing below this, we'll have to evaluate it slightly differently, because that could mean that perhaps there's a pullback undergoing, which is progressing. However, what we are looking for in terms of targets, this is what we are looking at. Now let's take a look at the NQs. This is the NASDAQ 100. What a fantastic looking chart it is. Let me get rid of these levels, because these are from before. I will be giving the new levels end of the video. And here, look at this 200 week moving average, and then this is the 20-week moving average. Fantastic momentum. We were looking for 17,250 as our level, and last Friday, not only we achieved that, we in fact exceeded that. So that's pretty good. And in terms of just the expansion of this swing, this one which I'm pointing here, we have some further targets now. 18,570 is the 1.272 expansion, and above that we have 20,774. Does feel like it's quite a way away, but this is the kind of levels that we are getting. Is the market going to get there? I do not know at this stage, but the market does look pretty strong. And here's something interesting. This green line which you see, this is a ABCD shorter term, which in fact takes it beyond the 1.272 expansion and closer to around 19,700 level, close to 20,000. And one more interesting thing is, this is really long term. I'm not sure how long it's going to take to form this. If it were to happen, this is a price projection ABCD, and if we take that, where does it go? It goes to very close to 20,700. So we'll have a confluence of two things. We'll have one-to-one price projection of the COVID lows being projected from the lows of 10th of October 2022. That's when this bear move ended, and now making all new all-time highs in NASDAQ 100 futures last week. One-to-one price projection, in fact, see this market having a confluence with the 1.618. Let me mark it like this so that it's a little bit more obvious. Here we go. So yeah, 20,000 NASDAQ. Wow, but this market seems to be on a tear. I don't know how long it's gonna take for this market to get there, and if even gets there, because there are a number of resistances on shorter term uh, time frames as well, and of course we have this expansion here. But if we were to look at really big ABCD, that could in fact point to 20,000. Wow. So we'll just keep that in mind, and we'll just keep on watching the price action, and I will of course keep you guys updated. But shorter term, what we are looking at is even shorter term than this. We can just take an expansion of this one and 17,700, and after that 18,500 is the kind of levels to be looking at, unless we get a reversal of some sort. So that's NASDAQ 100. A quick one on the Dow Jones. So this is the Dow Jones weekly chart for the E-mini futures. I'm going to get rid of this one because I will give you new levels now. And this one is very interesting because look, we have these several patterns completing around here. So this market really needs to get as strong as what we have seen NASDAQ, so that it just is able to really clear these resistance levels. On the daily chart, just go back on the daily chart and just show you one more time. Look at this ABCD pattern here. If S&P 500 is also completing its ABCD pattern, we'll have two markets completing these, and we'll be watching this. Maybe these cycles are actually expanding, and they could expand by 1.27 to 1.618. But for now, we have to watch the one-to-one price projection level. So just wanted to put it out there for you. Now, finally, well, we will be actually looking at another index as well, which we don't normally do. Okay, so this is Russell 2000. This one is actually the weakest link, and what we see is this market finding support from the 38.2% Fibonacci retracement. From a momentum perspective, is still not very strong because the 20-week moving average is below the 200-week moving average, but they might begin to catch up, and that might be something positive for this market. So this market, what it's doing is essentially it's just been trading in a very long range for a very long time now, and it's always testing the lows, tops and bottoms, tries to take break out of the range, now move back into the range, finding some support from the 38.2% Fibonacci retracement level. Now let's take a look at the New York Stock Exchange Composite Index. This is something which is not traded, at least not now, maybe 30-40 years ago, maybe on the knife exchange. But what it is it has all the stocks listed on New York Stock Exchange, including the ADRs. So it'll have some companies which are actually listed in other markets, such as London Stock Exchange, but also traded as an ADR, so American Depository Receipt. So this one had a very similar pattern to the Dow Jones, but it's not as strong as Dow Jones. And here, just wanted to point this out. This one is actually, it hasn't made a new all-time high yet. So the all-time high from 10th of January 2022 is still in place, but it is hovering around the 78.6% Fibonacci retracement. So something we need to actually be aware of, keep an eye on, and we'll just evaluate it how we move forward with this. Okay, with this, let's go and have a look at the 30-year bond futures chart. So here we go. This is a long bond future, and this is long bond futures chart. What we have been watching for this one is that it had been trading around this 61.8% Fibonacci retracement, and it's just been pulling back from a momentum perspective, look like the kind of a bear market. We have really a very strong bear market in the bonds, and there was also this bearish symmetry close by as well. But something really interesting happening in this market, which is on the daily chart. So here we go. While it was forming this low here, we were actually alerting you guys to this, because if bonds rally, then that helps stock market. As the old saying is that bonds do not need stocks, but the stocks do need bonds. Because bonds are interest rate instruments. If the price is moving higher, the yields are moving lower. Here we are watching this level, which is around 119, roughly speaking, is 118.28, the exact level, and that is going to be one-to-one price projection, which we like to call ABCD. I have not labeled it, but it's going to be an ABCD, one-to-one price projection pattern, plus a 38.2% Fibonacci retracement. And whenever we have a confluence of two or more ratios or a pattern coming together, we always like to pay close attention to that, because that is usually a strong level of support or resistance given the direction of the market. And look at this really nice move up for quite a few months now, and this is the first retracement we are getting right towards the 38.2% Fibonacci retracement with one-to-one price projection. So it is something which could in fact be a pretty good support if it is held, which could be held for quite some time. And if it begins to then move beyond certain levels, and then it could in fact mean we might be in a one-to-one ABCD, which could take us much higher, but we'll have to wait and see. Let's move back and take a look at the weekly chart of dollar. So here we go, we are looking at the weekly chart of dollar, and what the dollar is now doing is it broke out of this channel, and it's just now consolidating. Excuse me, this is the daily chart of the dollar index, and it's just consolidating just below the 78.6% Fibonacci retracement of this high to low right here. So there's a possibility that there is some weakness which would come in the dollar in the next trading week. And what it means is it will be positive. It should be positive for the metals, which we'll be taking a look at the gold shortly, and should also help stocks as well and the commodities. So here we go. This is the weekly chart. What we can see is it is above the 61.8% Fibonacci retracement. It is still below the 20-week moving average, and it's just kind of on a daily level consolidating here. But on the weekly chart, it does look like maybe it wants to go and target that 104 level. So a little bit mixed signal for the dollar, but next couple of trading days will be really important for the dollar and the dollar index. Okay, let's take a look at gold. So gold has been an interesting one, because you look at this pattern here. We did a video, and I'll try to put a link to it toward the end of this video, and I do apologize, this video is getting really long now, where we did a really long-term analysis of the gold market by looking at the quarterly charts on the monthly and quarterly charts. And while longer term bullish on gold, but look at the price action here. It's just been in a trading range here, 1667, 2080. So just watching this one, and momentum is positive here, and just moving back to this daily chart here. Key levels that we are watching, that here, which is the 1987 level, followed by 1933 level, 37 level, 1937. These are the key levels to watch on the downside. It's just forming this triangle pattern, and last Wednesday, when the stock market also found a bottom, the gold did something, because the following day it had an inside bar, and this is all coming from the 78.6% Fibonacci retracement. So there is a possibility maybe it just breaks out of this triangle pattern formation, which would be positive for gold. So we are really carefully watching gold on a daily basis. But for now, you can see it's a bit of a sideways action within a pretty large trading range. Now let's take a look at the natural gas really quickly for this one. Here we go. Look, I just wanted to show you, look at the daily chart of the natural gas, the kind of volatility that is in this market. This is the weekly chart. Look at this bear market, and there was a chance that maybe it was finally breaking out and might go and challenge these highs, but last week it opened lower, and ever since it's just been it closed about 24% to the downside. So talk about volatility in this market. I think with this we have come to an end, and pretty much covered all the markets that we like to take a look at on daily basis. And since this is our weekend review, so did longer term charts as well. The really interesting one is the NASDAQ. We have a really long ABCD one-to-one price projection, which is possible, but I don't know how long it'll take for the market to get there, and whether it'll get there. But we do have some shorter term targets that we looked at. So as always, I will keep you guys updated on the daily updates taking place. So thank you very much for watching the channel. If you like how we do the analysis for these markets, how we do the technical analysis, look at these markets using Fibonacci ratios, retracements, expansions, extensions, then please do think about subscribing to the channel. And if you like this video, give it a thumbs up. It just means that it's direct feedback for me that people actually like my videos, and just encourages me to keep on producing more content for you guys. And with that, the final thing is to actually give you guys the standard deviation levels for next week. So just bringing that out for you guys. So here we go. So these are the standard deviation levels that we are watching. What you see on this upper part of this graph, this is the weekly close. So these are the weekly levels. So these are the movements that we are expecting for the week in terms of points, and how they can translate for the +1 standard deviation, +2 standard deviation. I will also copy this and paste it in the description so you guys can have a look there, but I think the format in the description is not that great, so here you can have a visual look. And the bottom part is actually daily. So I mentioned the daily closes because these are the closes of last Friday, so the that was also the end of the week, so the close remains the same, but of course on a daily chart the number of points range that we are expecting is less than what we're expecting for the week. So these will be your +1, +2 standard deviation levels, and -1, -2 standard deviation levels, where the markets might actually gravitate to throughout the week and on a daily basis as well. So again, thank you very much for watching the video. I wish you good luck and good trading.